And of course, the question we get asked a lot by clients is why is the business income coverage in their policies not responding at a time when they need it the most? Welcome to the How Insurance Works podcast. If we have not yet met here, my name is Mike McGilvery. I'm a second-generation licensed property and casualty insurance broker and agent at Shaw Moses Mendenhall & Associates in Southern California. My goal is to simply help educate and inform on various aspects of insurance and the insurance industry. The content in this podcast should not be considered insurance advice and is for general informational purposes only. Insurance forms and endorsements vary based on insurance company changes in addition dates, regulations, court decisions, and state jurisdiction, so please consult with your agent for further advice. Now, the topic of today's podcast is something that we have been talking with our clients a lot about lately, and that is discussing the issues and the challenges in honoring business income coverage due to COVID-19. Now, of course, we know that this is a complicated situation. This is an unprecedented situation, but rightfully so. The question that we get asked by our clients the most is why, at a time when we need our business income coverage to respond, why aren't our policies responding? Well, there's certainly a lot of movement in the industry around the issue. We're seeing thousands of claims filed, thousands of claims denied. We're seeing some companies being very proactive, others being very innovative, and we're seeing some companies that are simply silent on the issue. But there is a lot of movement in the industry around the issue, and my goal here on the podcast is simply to provide a little perspective on why things are so complicated and challenging in this unprecedented situation in honoring business income claims due to COVID-19. I'd like to do 5 different things here in the podcast. 5 topics I'd like to discuss. Number 1, lay a foundation and simply talk about business income coverage. What is it and what is it designed to do in a normal environment? Number 2, how the policy language in business income coverage relates to COVID-19 and the grounds for which insurance companies are using to deny claims when they're denied. Number 3, the challenges and the solvency issues facing insurance companies in honoring business income coverage due to COVID-19. This is an important topic to talk about in the larger scope. Number 4, what's being done to address the issue? And number 5, to file or not to file a claim. Should you file a claim? Should you not file a claim? I can't tell you that directly, but we can certainly talk about some considerations there. Now, going back up to number 1, what is business income coverage? Well, very simply stated, if you have a loss at your business, property that's damaged that causes you to shut your business down and perhaps relocate to operate until your primary location is restored, this is the coverage that will take care of you. It'll help pay your employee payroll, the extra expenses you might incur in order to get a temporary location until your primary location is restored. So it is designed to take care of you in those situations. Now, what is very important to note, and this is especially important to note when we talk about business income coverage and how it relates to COVID-19, is that business income lives in the property portion of your policy. If you were to look at your property schedule, in your insurance policy, you're going to see line items. You're going to see policy and property declarations. You're going to see property conditions. And on that list down below, in most policies, you're also going to see business income and extra expense. So very important to note, it lives in the property portion of your insurance policy. So let's talk about business income. There are 3 criteria that we need in order to trigger coverage in most policies. Again, I'm going to speak very generally here, but in most policies, I want to talk about the 3 criteria needed. We're going to cite and illustrate a simple example and apply that criteria to that example. So the 3 criteria needed. Number 1, we have to have a suspension of business operations. Number 2, the suspension of operations has to result from a direct or physical loss or damage to property at the premises. Number 3, the loss or damage has to be caused by a covered cause of loss. So keep those 3 criteria in mind. Let's use a simple example to illustrate. A fire breaks out at our business. It destroys half of our business building. It burns half of our business building down. We have to shut our business down. We have to relocate temporarily to another location to resume operations until we can be restored at our primary location. Let's use that example. Let's apply the 3 criteria that are needed in most policies for business income. So number 1, do we have a suspension of business operations? Well, yes, if there's a fire at our business, we're forced to shut it down because of the fire. We satisfy criteria number 1. We have a suspension of our operations. Number 2, that suspension is due to direct physical loss or damage to property at the premises. The fire caused a direct physical loss or damage to property. And that's why we suspended business. So we are satisfying criteria number 2. Number 3, the loss or damage has to be caused by a covered cause of loss. And in that case, fire is a covered cause of loss in insurance policies. So we are satisfying number 3. So in the case of a fire at our business, causing us to shut our business down while we temporarily locate at another location until we can resume operations at our primary, we satisfy all 3 criteria. Business income coverage is triggered and responds. Now, I want to talk about one more element to business income coverage. We're seeing a lot of claims filed for business income pursuant to civil authority. And it's important to talk about civil authority. So what is this in your insurance policy? Well, civil authority, very simply stated, is when a government entity denies access to your property, usually for reasons such as wildfires, flooding, riots, acts of terrorism, usually with safety concerns. They are denying access to your property. Now, just like with business income, if you are claiming civil authority, business income pursuant to civil authority, there are 4 criteria in most policies that have to be met. So let's talk about those 4 criteria, cite an example, and apply the criteria to that example. So with civil authority, I'm going to summarize this, but in general with most policies, there are 4 requirements. Number 1, we have to be prohibited access to our premises. Number 2, there has to be, and the reason we're denied access to our premises is because property around us sustained a direct physical loss or damage. Number 3, the loss or damage to the property around us is resulted from a covered cause of loss. And number 4, the loss or the damage to the property around us was within about 100 miles. Now, it's different with every policy, but about 100 miles. So let's use the example of an evacuation due to a wildfire. So the city or the county or the state, for that matter, tells you that you must evacuate because there is a wildfire coming over the hill to threaten your business. Let's use that as an example, and let's apply business income pursuant to civil authority. Why would we need the business income in this case? Well, if we have to evacuate and we're not able to operate our business at that location for maybe 2 weeks, 3 weeks, perhaps even a month, then we may need a little bit of help with the extra business expenses that we incur. Now, it's important to note here before we get into the criteria and apply it to the situation that most civil authority, it's going to last for 4 weeks of coverage. But let's take that example of an evacuation due to a wildfire and apply it to the 4 criteria for claiming business income pursuant to civil authority. Number 1, are we prohibited access to our premises? Yes. If the city or the county or the state says you must evacuate, they are prohibiting access to your property. Number 2, the reason they're prohibiting access to your property is because the property around you is sustaining a direct physical loss. Well, in the case of a wildfire, that's usually true. A lot of the property around you is being damaged. The fire's creeping up. That is why they're telling you to evacuate. So we're satisfying criteria number 2. Number 3, the loss to the property around us is caused by a covered cause of loss. So again, fire and insurance policies, that is a covered cause of loss. So we are satisfying criteria number 3. And the loss to the property around us is within 100 miles. Again, generally speaking, some policies are different. But in the case of a wildfire, the reason we're being evacuated is because that is the case. So we are satisfying all 4 criteria. And this is why that even when you have an evacuation and you leave your business, if you don't have any actual damage to your own property, you can still claim business expense pursuant to civil authority because the property around you has been damaged. So let's now talk about that coverage. We're going to talk about business income and claiming business income pursuant to civil authority, and we're going to apply that to the COVID-19 situation. We're going to apply the policy language, and I'm going to talk about how insurance companies are interpreting that language due to COVID-19. Now, I'm not a claims adjuster. I'm not an attorney, but I can share how insurance companies are interpreting the language. So let's go back to business income. We have 3 criteria there. And we have a COVID-19 situation where we have to shut our business down. We have a stay-at-home order. We cannot operate our business. It is shut down. Let's go through the 3 criteria for business income and apply that in this situation. Number 1, do we have a suspension of business operations? No question. We are satisfying criteria number 1. Our business is suspended. Where we're running into a problem and how insurance companies are interpreting the language in the policies is when we get to numbers 2 and number 3. So requirement number 2, The suspension of operations has to be because of a direct physical loss or damage to property at the premises. Where the insurance companies are arguing, they're saying there isn't, due to the virus, there isn't a direct physical loss or damage to any property anywhere. We're not satisfying requirement number 2. Number 3, the loss or the damage must be caused by a covered cause of loss. Well, in 2006, a lot of insurance policies were updated, and there was an exclusion put in for property damage due to viruses, bacteria, microorganisms, pathogens. So we're not satisfying number 3. We don't have property damage, number 2. And number 3, the loss or damage has to be caused by a covered cause of loss. Even if we did have some damage, viruses are excluded as a covered cause of loss. And this is the basis in how insurance companies are interpreting the language to deny some of these claims. So let's look at civil authority. We're still seeing a lot of claims filed. Business income claims pursuant to civil authority. Well, with civil authority, that seems to make sense. Remember, civil authority is when a government entity is denying access to your property. So it would seem we have a stay-at-home order imposed. We are being denied access to our property. Why won't civil authority apply here? Let's look at our 4 criteria in the COVID-19 situation. Again, just a business that has been shut down via the stay-at-home order. Let's look at the 4 criteria. So number 1, to claim business income pursuant to civil authority, we have to be denied access to our premises. Are we being denied access? Absolutely. We have the stay-at-home order in effect. We are denied access to our business property. Number 2, and here's where we're going to run into a problem, is number 2, 3, and 4. Number 2, the reason we are denied access to our property is because the property around us sustained physical damage or loss. And again, the way insurance companies are interpreting this is saying that there isn't any direct physical loss to the property around the business. Therefore, we're not meeting criteria number 2. Number 3, the loss or damage to the property has to result from a covered cause of loss. Again, in 2006, a lot of insurance policies were updated, and they're putting in an exclusion for damage to property due to a virus, bacteria, microorganisms, certain pathogens. So we're not meeting criteria number 3. And number 4, the loss or damage to property around us has to be within 100 miles. But again, they're arguing that there isn't any damage to property around us anyway, so we're not meeting criteria 2, 3, and 4 to claim business income pursuant to civil authority due to COVID-19. Now, this is how the insurance companies are interpreting the policy language. This is where we're seeing why a lot of these claims are being denied. Now, there is something being talked about by the courts, and that is something called a public space option. And that's essentially saying that we're denied access to our property because of damage to the resulting area, not other property, but the public space around us. This is something they're considering in the courts and talking about. There isn't a lot more information about it. But hopefully that gives a little bit of perspective simply on how insurance companies are interpreting this policy language. Now, I do want to mention there is a broader coverage form called business interruption. A lot of times business income and business interruption get mixed together. Business interruption is the same type of coverage, but it usually is much broader. It includes more perils that you're insured against. So there are some insurance policies that are operating on a business interruption form where they're really taking a serious look at approving these claims due to COVID-19. So just know that there is a business interruption form out there. It is a little bit broader. I do want to mention that. And I also do want to mention not all claims are being denied in all cases. So it depends on the insurance company and the insurance policy. Now that we've explored a little bit about the coverage and we've talked about the policy language and how the insurance companies are interpreting it, there is a larger issue here, and that is the challenges and the solvency issues facing the insurance industry in honoring all business income claims due to COVID-19. And I'd like to talk about this here just a little bit because it does put things in a different perspective. Now, I want to quote an article from the Insurance Journal written by Andrew J. Simpson, March 30th, 2020. Quoting the title, P&C, now P&C stands for Property and Casualty, P&C insurers put a price tag on uncovered coronavirus business interruption losses, unquote. Quote from an excerpt of the article, quote, the property casualty industry estimates that business interruption losses from the coronavirus just for small businesses in the United States could be between 220 and 383 billion per month, or a quarter to half of the total industry surplus available to pay all P&C claims, end quote. Now, they're using business interruption there as a term. Think business income, business interruption. Again, the business interruption forms are simply broader. But according to the article written by Andrew Simpson, they're estimating the cost for just small businesses only in order to honor all business income claims. It is at a cost of $220 to $383 billion per month. Now, the insurance industry itself, they are required by law to keep a certain amount of money in retention. Now, after the amount of retained money, what we have is $800 billion available in the entire industry to pay out claims. So if they are estimating it might cost between $220 and $383 billion per month, that entire $800 billion surplus is going to be used up very, very quickly. Now, David A. Sampson, who is the president and CEO of the American Property and Casualty Insurance Association, was quoted in the Claims Journal on April 8th, 2020. And I'm summarizing this. It's not a direct quote, but he is estimating and stating that companies with 100 employees or fewer could see business continuity losses of as much as $431 billion a month. So we can see the challenge here the insurance industry faces. In 2.5 months, at $431 billion per month, in 2.5 months, the entire insurance industry could be liquidating assets, declaring for bankruptcy, and they would not have any money to pay out any other claims. And this is the big issue. This is why business income in most insurance policies is not designed to specifically cover pandemics. It is the actual cost. It is enormous. And insurance works very, very well when it remains affordable when a relatively small number of claims are spread across a broader group, spreading the risk. So typically, insurance policies, when you have enough people buying them, and they're made affordable that way, when you have a relatively small number of claims spread across a broader group, that is when insurance works best. The problem with a pandemic is that when you have a global pandemic, every single policyholder suffers a significant loss for an extended period of time. So you can see where the solvency issue here is, and that is a true challenge facing the insurance industry. So being forced to pay out all business income claims to small businesses, it's going to undermine the ability of insurance companies to pay other types of claims. That is going to exacerbate the negative financial and economic impacts we're already feeling. So that is why the insurance industry is pushing back. Now, this is also a PR problem for a lot of the insurance companies. If they deny all claims, that's a PR nightmare, not to mention if those claims are challenged, the cost of defending those lawsuits. We talked about the strain on the finances. So what is likely to happen? We're going to talk about that in a second. I do also want to mention there is one policy when we talk about regular insurance policies not being designed to cover pandemics. There is one policy, at least that I know of, that exists specifically to cover pandemics. And that was developed by a company called Munich Re. They're a large German insurance company. They have a policy called Pathogen RX. Now, the only entity, and I don't know for sure, but I believe this is what Wimbledon bought, because Pathogen RX is at least the only policy I know of that's specifically designed to handle pandemics. But the operators of Wimbledon just enjoyed a $141 million payout because they bought pandemic insurance. Now, Forbes wrote in an article, and I don't have the actual author, but citing the source here from Forbes, quoting, but according to the Action Network sports business reporter Darren Ravel, the organizers of Wimbledon are set to receive a $141 million payout thanks to the coronavirus pandemic insurance policy it paid a total of $34 million for over the last 17 years. So obviously very, very expensive, and end quote, but very, very expensive policy. Wimbledon is going to receive the $141 million payout. And what may happen in the future is that insurance companies may be developing their own pandemic insurance as we move forward. So let's talk about what is being done. We talked a little bit about how the coverage works. We talked about how insurance companies are interpreting the language and where they are finding the grounds to deny some of the claims. We talked about the challenges of the solvency. There is a policy out there that will specifically cover pandemics, but what are some other things being done to address the issue? Well, there is a lot of movement here as well. Now, several states, Massachusetts, New York, Louisiana, Pennsylvania, Rhode Island, South Carolina, have all put legislative bills into session for discussion only, where the central point of these bills is to force insurers to retroactively cover business income losses for small businesses. Now, we talked about the solvency issues and the reasons why the insurance company is pushing back here on this, but states are trying to introduce legislation to force them to pay. There is also a bill in the House of Representatives called the Business Interruption Insurance Coverage Act, that is H.R. 6494, essentially mandating the same thing. Now, all of these bills work a little bit differently. New Jersey's proposed bill, now this is on hold, but it's requiring business income payments for companies with 100 or fewer full-time employees. Massachusetts' bill is requiring claims be filed and approved, reimbursing firms with 100 or fewer employees, and they are trying to invalidate the exclusions for virus losses. So there's a lot of movement from the state legislatures that are trying to force insurers to pay these out. We did talk about the solvency issues, though, and that's why the insurers are pushing back against this. Now, what is most likely, hopefully, we don't know, to happen? This is all very speculative. But what is going on? I want to quote another article by Andrew Simpson, and this is March 31st, 2020. This was in the Insurance Journal, quoting the title of the article, quote, P&C, that's property and casualty, quote, P&C insurance industry backs new government fund to help businesses and workers hurt by coronavirus shutdowns, end quote to the title, and quoting directly from the article. The property and casualty insurance industry has joined a broad business coalition in supporting and crafting a new federal relief fund for businesses and workers affected by the quarantine and stay-at-home measures necessitated by the coronavirus crisis. The new relief vehicle, the COVID-19 Business and Employee Continuity and Recovery Fund, is meant to help businesses retain and rehire employees, maintain worker benefits, and help cover operating expenses such as rent. It may also provide funds for payroll, lost income of sick employees, and lost business revenues but not profits, end quote. So there is some movement there with this fund. And what is likely to happen, if it happens here, is that the insurance companies understand how to handle these business income claims. And because they do that, and they know how to handle it, they have the experience. The idea here is, let's let the insurance companies handle the claims, and hopefully, maybe they'll be reimbursed by the government. So that is the situation going on. They do have a name for this fund, the Business and Employee Continuity and Recovery Fund, but is it likely to happen or not? We don't know. Anything right now at this point is purely speculative, but there is some motion there and some movement. But again, the idea here is that since insurance companies have experience in dealing with these claims and they know how to deal with them, let's let them do that and let's have the federal government reimburse them. Again, things are changing daily. We will keep you updated here on the podcast as things develop. So on the final topic, to file or not to file a claim. Well, this is something that I cannot tell you, but here's what I can say. The only entity that can tell you whether a claim will be denied or accepted is the insurance company itself. Insurance agents cannot tell you whether a claim is going to be accepted or denied. So if you feel like you want to file a claim, you can always file the claim. There are some things here being talked about. If something does get worked out with the federal government and the insurance industry, if you file a claim, you'll have a claim number in the system. Now, insurance companies are required by law to give you written notice of why they are denying a claim if they are denying it. And in the course of that, you will have a claim number generated. There's talk that if you have a claim number generated, it'll be in the top of a queue. And if something does get worked out between the federal government and the insurance industry and these business income claims are honored, perhaps they might get to you a little bit sooner. But again, a lot of this is conjecture. A lot of this is speculation at this point. The issue on whether or not to file a claim is something to discuss with your agent, to really think about. Just know that the only entity that can approve or deny a claim is the insurance company itself. So when in doubt, this is a situation where you may want to file the claim. So hopefully that gives a little bit of perspective on this entire situation, on why things are so complicated in this unprecedented situation. For any questions or comments, please feel free to reach out to me directly. Mike Mack at howinsuranceworks.co. That's Mike Mack at howinsuranceworks.co. Please stay safe out there, and we will see you on the next podcast.